Hello trading friends and welcome back to Forex Focus, brought to you by tastyfx, taking a deep look at the Chinese economy on today's show and letting you know how bad it's looking. Is there a case for a turnaround? I'm sure if you've looked at the Chinese stock market, quite volatile in the last year as the US stock market continues to print all-time highs. We don't get into the stock market so much throughout today's show. We will go deep on GDP, interest rates, all the way to exports and new loans in China, and of course cover the Chinese yuan on multiple levels. But just as a quick aside, yeah, the Chinese stock market, if you're looking at the ETF FXI, large cap Chinese stocks, it's bounced back recently, but it's really trading around lows going back to the financial crisis of 07, 08 range. And again, you compare that to an S&P 500 and NASDAQ that have printed multiple all-time highs here this year. Some pretty scary stuff. So let's take a look at what is operating behind this quite volatile Chinese stock market in its economy. We're going to start by looking at GDP, right? And these are the quarterly growth rates for the last 10 years plus. And the chart itself is really hard to glean anything from, especially you got that whipsaw of the pandemic, and it really throws off a lot of economic data. But thankfully, your friend Frank did some number crunching for you and found that pre-pandemic, the average quarterly GDP growth rate was right between 1.5% and 2%, multiple 2% plus prints. And as you can see, a stretch of years and years and years of no negative prints, not really any prints below 1%. Now, fast forward to post-pandemic, and let's say since 2021, and of course, those of you out there will remember, well, the latter part of 2020 and 2021 and 2022, huge years for the US economy and a lot of major economies. Not so much for the Chinese economy, and this is what you may have heard, especially maybe 6 months ago when the Chinese stock market was really drilling through historic lows, is that they just didn't have the same pop coming out of the pandemic. And you can see a negative print, a steep negative print there in 2022, but also the last year or so, you're getting a lot of near zero prints, a lot of under 1% growth when, like I say, pre-pandemic, they didn't really break below 1% quarterly growth very often at all. And so a general trend lower, and also post-pandemic, not the same amount of growth that we've seen in the US and parts of Europe as we've seen here in China, and just not bouncing back to that pre-pandemic level. Now let's take an even deeper look, another metric here that maybe you're not privy to, but you should take a look at, because this is one that really will move Chinese equities and the market at large, is the Chinese PMI. And now this is a measure that essentially says, okay, if you're at 50, then you're not seeing any growth, but you're also not seeing any declines. If you're below 50, that's contractionary economy symptoms. And if you're above 50, that's expansionary. And what they do is they look at manufacturing, they look at services, the whole economy, and let you know if that economy is expanding or contracting. And as you can see here, prior to the pandemic, again, consistently above 50. Actually, prior to the pandemic, the last time that they hit below 50 was Feb 2016. And you might remember 2015 and 2016 were a little bit of a volatile period for the Chinese economy. And so essentially a 5-year stretch of above 50 expansionary economy when looking at services and manufacturing. You got, again, the big whipsaw that throws off a lot of our data in 2020. But since then, multiple sub 50 prints. Now, the last couple of months, we have seen some above 50 prints that have been promising, but we saw this in 2020, in 2021, 22, 23, and now presently, which is, okay, maybe 1 or 2 or 3 above 50 prints, but then another below 50, and that just wasn't the Chinese economy of that 2016 to 2020 range. It was consistently above 50, just like that GDP was consistently between 1.5% to 2%. And now you might look at a 1% growth rate as being, oh, that's a positive thing. But it's not where they were operating pre-pandemic, and thus you have some of these woes. Okay, another thing to look at outside of your GDPs and your PMIs, kind of monitoring how the economy is doing, where are their interest rates at? What is the central bank in China thinking? And very different than what we've seen the last couple of years from the Fed, from the Bank of England, from the European Central Bank, and beyond, even the Bank of Japan, who haven't really been hiking all that much. They haven't necessarily been cutting. The People's Bank of China has been lowering interest rates considerably, not only coming through the pandemic of early 2020, but on into 2022, into 2023. And now people wondering, are they going to cut again here in 2024, as they have not hiked in, that I have data for going back until 2013, 2014. Really interesting to see this. Now, of course, you might expect this with all what I just said. Their economy is very volatile. It's not as consistent as it was pre-pandemic. Well, okay, their central bank must be loosening. They must be cutting rates to help out, help ignite some of that growth, just as the Fed cut interest rates at the outset of the pandemic. Economy picked back up. They hiked interest rates to contract a little bit and lower inflation. But yeah, a different story here in China. Didn't get that pickup, and thus they continue to lower interest rates. And that has happened simultaneously with their currency being devalued to pretty historic levels. And the forex traders out there know that higher interest rates in one economy versus the other can create greater demand for that currency to invest at those higher interest rates. And so you might expect, going back the last couple of years here on the chart, going back to 2021, 2022 range, when the Fed starts to hike interest rates, and now we're beyond 5%, and China the whole time is cutting interest rates, the U.S. dollar is going to see a lot of strength during that period. And this is also a piece that is trying to spur growth in China via exports, right? A devalued currency might be able to lift those export numbers. And also a big number in China is their new Yuan loans that you have here at the top, and then exports at the bottom. And you see some nice spikes for sure in the last year or two as they've been cutting rates and devaluing the currency there. But you've also seen some significant lows. Again, volatile numbers back and forth, not consistently higher. And even on the exports front, you're seeing some negative prints. And on that new Yuan loans front, you're seeing some of the lowest readings going back to 2015, like I just said, when China last had some economic trouble. And so some of the biggest prints there for that new Yuan loans, but either right after or followed by some of the lowest prints. And so they're not getting the results that they want from this expansionary policy. The economy didn't rebound the way that they wanted to. Where does that leave us here? Well, the market is pretty even on if it'll rebound or if it'll continue through those pre-financial crisis of 07, 08 lows, as they've, like I said, bounced off of those lows, but not by much. And you see here the currency, very similar setup where the dollar isn't necessarily through its highs against the Chinese yuan, but it's close. And so, again, the market pretty even on, will it get worse for China? Will they continue to devalue and continue to cut interest rates? Or will they start to stack up some economic data points that point in the opposite direction and thus don't need to continue with this expansionary policy? It'll be a really interesting trade on the currency front and on the equity front. And also, we have a lot of Chinese economic data coming in the next week or so here. So stay tapped into that. Maybe something that you're not used to trading. It's not the most liquid market in the world. It's not the easiest to access, right? Chinese currencies or equities or any markets here from the U.S. But it's a really interesting story. And if you got a take on it, you can access it and go one way or the other. Sitting near these extremes, it'll be a pivotal point to follow this one.